Hey folks, it's Simon here with your Tao Daily update for Tuesday, the 17th of December, 2024. Broader indices finished higher today. You can see the S&Ps here finished up nearly 0.5%. Qs dramatically outperforming. They're up 1.5%, new all-time highs. And what we're seeing here is a pretty significant change in leadership. Cast your mind back to a month ago, mid-November, and what was really leading the charge was things like financials. And you can see here, financials breaking down, haven't broken them down and lost trend structure just yet, but they peaked late November and they've been underperforming the market since then. Then we had things like industrials, very similar pattern. They were leading the charge up until late November, and now their uptrend is busted. Okay. Then we had things like energy, which kind of didn't make a whole lot of sense given what the crude price was doing. But still, energy sector had a massive surge post the election, and that trend is now completely busted below the 200-day moving average. So what we've seen is a real unwind of the so-called Trump trades, and it's all come back to tech. All right, it is really Qs that are in control here. And if we look a little bit more deeply, we can look at the Mag 7 also trading at all-time highs. All right, so that's where the strength lies. There's a couple of risks here. Okay, one is market breadth is looking pretty awful again. If we look at RSP, which is the equally weighted S&P 500, this is broken down. All right, so this just shows the narrowing of breadth. S&P closed below its 50-day moving average. We've lost trend structure, so that trend is kind of busted for the time being. And the other risk is the move we've seen in yields. So we had the CPI data out last week. All right, the equity market applauded that because it gave a green light for a 25 basis point cut tomorrow. Okay, but bonds have been less enthusiastic. We've seen bond yields surge back up to 4.5. Now, will they break this trend line or will they respect it again is kind of the next question. You can see this is pretty powerful trend line. So if we do get rejected here and bond yields start falling, which would mean bonds start rallying, maybe tech can keep pushing higher. But if this downtrend in yields gets broken, I think we're going to see some pressure in tech. As for tomorrow's FOMC meeting, look, the Fed have basically handcuffed themselves. We're going to get a 25 basis point cut. This is absolutely in the price. Okay, it's not going to surprise anybody, and that in itself actually could be a buy the rumor, sell the news type event. All right. So, given the narrowing leadership, the change in leadership, and the potential for a buy the rumor, sell the news event with the FOMC rate cut tomorrow, I sort of think this rally could be on borrowed time. Now, it's not to say we're going to see the start of a big sell-off in December. That would be pretty unusual. But if the market started pulling back hard in January, that would not surprise me. That's what I got for you today, folks. I hope it helps, and I'll catch you next time.